Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Joe Nikruto, and today I am here with Joe Nikruto. Also, producer Carter. Between the two of us, we are going to row this boat to get you a little bit of information. Today, we're going to talk just briefly about corn, beans, and wheat. Take a look at the technicals really fast. Give us a weekly update so we know where we stand at the end of the week, and maybe just briefly touch upon, we've had some requests from customers for some ideas about how to get protection in front of this acreage report coming up at the end of the month. We'll talk about that real quick as well. Before we get started, I want to give a shout out to everybody in Northwest Indiana. We work here in the city of Chicago, but I go home and go to sleep in Northwest Indiana, and had some pretty rough weather that most of you folks are used to experiencing a little out west. This is some out west weather that you might see in Iowa, in Missouri, certainly other side of the Mississippi River. We always think, we're too close to Lake Michigan to have 4 or 5 tornadoes touch down within the span of a week or a week and a half. But nope, sure enough, a lot of folks impacted in various communities, some communities that right near the lake that don't usually have this type of weather impacted negatively, and shout out. And certainly our thoughts and prayers are with them and everybody else that has to deal with this kind of weather at this time of the year. Before we get started, I'd like to let everybody know that if you are interested in hearing about grain market movements or strategies to trade or help you make sense of price action daily, you can sign up for our Ag Hedge Hotline hosted by expert market strategist Ted Seifert. Totally free, gives you the chance to connect with us personally if you have any specific questions about the markets or agricultural commodities in general. If you are interested in learning more about price action and how to make price action work for you, it's a perfect way to take that first step. The link is in the description below to sign up for that. Totally free, zero commitment. We're happy to speak with you if you have questions. We'll call you, you call us, just two folks having a conversation. Today, let's just jump right in. If you guys are okay, let's talk about weekly corn numbers. What I saw here today was corn market opened the week at 466. The high was 470 and a quarter. The low for the week, 455 and 1/4. Last trade, 464 and a quarter. That weekly change appeared to be up 5 3/4. Funds estimated to be long 123,000 contracts, which is notable because when we sat here last week, funds were estimated to be long 248,000 contracts. So here again, they have taken a big chunk off of that long position and not seen much in the way of downside price action, which is notable. 10-day moving average 464 and a quarter, 18 465 and a half, 100 466, all cast within the context of this close here today, which was 464 and a half. And if we look at this chart, that 464 and a half, while below the 18-day and right on the 10-day, and not quite positive, it sort of looks positive. You've got a market that has come up off of this big downdraft that we saw 2 weeks ago. This market tried to pull back and get below the 200-day moving average, comes in at 454 and a half. My notes say we're bounded to the upside by 477 and a half, top of the range there, bounded on the lower end, 442 and a quarter. But really your lower bound has been that 200-day moving average. And we jumped up and down on it. Say that 3 times fast, Carter. We jumped up and down on it 1, 2, 3, 4, 5 times and couldn't get below it. We sit here at 464 and a quarter. Seems as though the markets are waiting, whether they're waiting for this tariff situation on April 2nd, whether we're waiting for acreage numbers on March 31st. I think we might be waiting to see. Looked like the funds put on 10,000 contracts yesterday. I don't know how many they did today yet. Could be that the funds are back on the bid. And you look at this and it's not surprising to say maybe corn is gearing up for another run toward the highs. If we, interestingly and notably, importantly, if we fall below this 454 200-day moving average, your next stop is that swing low 442.5. And so, pays to pay attention to these charts if you're producers and you're gearing up. I know everybody's busy, but we are right here at what appears to be a turning point in corn and wheat and beans as well. Beans, your weekly open was 10.16 1/4. The high was 10.21 3/4. Low for the week, 10.04. Last trade I saw was 10.09 3/4. That was down 6 1/4 in beans. The funds short 11,000, estimated to be short 11,000 beans here this week, which is notable because last week they were short 39. Maybe that's a 29. Have horrible handwriting. 20. Let's call it 29,000. They were short 29,000 last week when we met here on Friday. Now they're short 11, which means the funds are on the bid. And if they're going to reestablish a long position, that is going to mean that we're going to get out over these moving averages, right? 10-day comes in at 10.11, higher than our last traded close of 10.09 3/4. Your 18-day 10.16, your 100-day 10.27.5. A lot of what should be resistance on its face. This chart says, okay, you've got resistance at 10.18. Being below these moving averages this way is not the hallmark of an uptrending market, is not a hallmark of a bull market. However, what you see here, and you see the same thing on the wheat and the corn chart, is a market that can be described as either waiting or building a base. In beans, you've got a double bottom here on this chart, and so it's easier, doesn't require as much imagination. We've got that double bottom that comes in below 10, 990 something. But you'll see it when you look at this chart, and we seem to not be accelerating toward those levels. And that has to be respected if you're short, and that has to be respected if you don't have long positions on, or you're thinking about getting long in front of this acreage report. Market's giving you a chance. Acreage intentions, end of the month, the 31st. The number that has been trafficked is near 84, somewhere on either side of 84. The market will be paying very careful attention to that. 84 number, certainly not bearish. And some customers today feeling like they could see a pop either into that number or post that number if the market reacts bullishly to a confirmation of that 84. We shall see. Wheat, your May weekly open 559. The high was 575 1/4, low 552 1/4. Last trade 558 1/4, up 1 1/4 on the week. Funds are short 72,000 contracts of wheat, which is notable because last week they were short only 57. Funds continue to add to that short position, and you can see that kind of here by looking at this chart. This is not a terrific chart for wheat, and we're used to that, right? We're used to seeing wheat and thinking, oh man, this is just not great. But you look at your 10-day moving average at 557, your 18-day at 557, which we closed above, your 10-day at 560, and your 10 and 50-day moving averages at 570-ish. That 570 could be stout resistance, both the 10 and the 50-day moving average camped out overhead, kind of daring this market to give it a shot. We're probably going to need some sort of news. We've had some news, and this market doesn't seem to want to race higher just yet. But it does look a lot like the bean chart, and it does look like a lot like the corn chart, where your acceleration is not there. Market is not pressing into new lows and maybe coiling or pausing for a move higher. We wanted to take a brief moment and touch on what I would consider just a quick bit of education. Spoke with some customers today, and they're saying, okay, if we come into this this acreage report and we get an 84 number or even sub 84 number, I think the market will react favorably. And I can't disagree. I'm not sure how high the market needs to move on that acreage number, but it's 84 number is not a lot of acres, right? Or rather much less acres than last year, and may have to be accounted for in price. Either way, that's a whole different debate. But if you're thinking that you have to have upside protection on in front of this report, a neat way to do it is with weekly options. You don't really need to have a whole lot of exposure post report, because if you're right, the market's going to rally. If you're not right off the acreage number, market's going to try to rally and fail. And suffice to say that you're going to have an answer to this question pretty quick once that report comes and goes. And that weekly options, you could get an April week 1 option. They expire on Fridays in the first week of April. So this trade is good for, I think, roughly 14 calendar days. I was looking at the April week 1 calls, and soybeans for May settled near 1010. Our weekly report said 1009 3/4. So I picked a 1010 strike just because this is not a specific trade recommendation. We can't give specific trade recommendations. We don't know your risk tolerance. We're not sure what your operation requires in terms of specifics. We'd be more than happy to speak with you and talk about that. That would be tremendous. We'd really enjoy that. If you have questions or you want to talk about this situation or other ways to take advantage of price action, we're more than happy to speak with you about that. But I picked 1010 just for educational purposes, not a specific trade recommendation. The delta on that 1010 is 50. And suffice for our purposes here today, let's just say that the delta measures how much the price of the option is expected to change versus the movement of the underlying futures contract. So in this case, with a 50 delta, if you have $1 worth of movement in your futures contract, you could reasonably theoretically expect 50 cents worth of movement in your option contract. And that's, to use a non-technical term, that's what I would consider pretty juicy. That's pretty good. If the market does move away from 1010 and starts to rally, the value of your option is going to increase. So that option at the close today settled at 14 cents. 14 cents times $50. Where do we see May beans going? If you think you're going to get a pop on that report, either into the report or post report, 1050, 1065, maybe not out of the question. You must measure your ideas of price appreciation against the fact that you only have 14 days. This is a weekly option that expires on the first Friday of April. So, hey, you look at the market and say, in 14 days, if I get this 84 number or we get a sub 84 number and the market starts to rally, how far can we go? 1050, 1065, you can see with a break even, right? That 14 cents on 1010, let's call that 1025 is going to be your break even for this trade. You get your 1025, your 1050 minus 1025, 25 points, 1060 minus 1025, 40 points. These are values that make that trade make sense. So what did we cover? A lot of words used really fast. Basically, what we're talking about is that if you think beans can rally, but you don't need to pay up for a lot of time for options that are either May or are July or further out, you're going to pay for a lot of time, right? Time always costs money in options. This first week of April option, or maybe a second week of April option, or maybe a spread based off week 3, somehow we can structure it so that we don't really want to pay a tremendous amount of money, because with the answer that we're going to get here is going to come on likely come on March 31st, right? Is the market going to react bullishly to this acreage number or not? So a very specific way to take advantage or to protect against a very specific thing, which in this case would be price appreciation in the May bean futures contract. You may find yourself with more questions than answers after listening to that brief explanation of the May of the April 1 weekly options that trade off the May bean futures, that's totally fine. Send us a note, pick up the phone. My name is Joe. We're more than happy to speak with you and maybe flesh this out a little bit or tailor it to your specific situation. Thank you for listening to the Zaner MarketCast. No question of the week. No question of the week. What's your favorite pizza topping? You're going to have a pizza
Sausage.
And it's going to have one thing on it and only one thing. What's it going to be? Sausage. Yeah. I think I got to go with Canadian bacon. I wonder, do you think the tariffs are going to impact Canadian? That's a whole nother, we're going to put together a whole nother educational piece on tariffs as it affects Canadian bacon. But we're not going to talk any more about that today. Thank you for listening to the Zaner MarketCast today. If you need more because you just can't get enough of me, you can follow us on Facebook at Zaner Ag Hedge or on Twitter, LinkedIn at Zaner Group. If you have any questions you'd like answered on the show, there is a link for you in the description to do that. Just follow the instructions and we will happily answer your question on air. Thank you again, and be sure to like, comment, and follow the podcast to not miss a beat. We will be back with you as price action develops. Have a great weekend.